Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, we got a video lined up for 07/29/08 Tuesday, and we have a red Omni. We think this is going down again. Traders, you know the theme of these videos for weeks and weeks on end now has been don't fall in love with the upside. It's here on the board, and we mention it just about every video. Now, we've had this little bit of a rally last week, and then it finally conked out, and we went down on Friday. We went down again Monday, and it looks like Tuesday, they want to push this thing down even lower. Now, even if it had some kind of a rally, I am here to say once again, don't fall in love with the upside. Traders, you know, it's one thing if just the United States market, the Dow Jones Industrial Average was the only market that has this big head and shoulders pattern and has this bearish look. But I kid you not, the German DAX has it. Now the FTSE has it. I mean, the markets all over the globe seem to have this problem. In fact, I want to show you a couple of charts right now that will help illustrate what I'm talking about when I say that world markets all seem to have this massive head and shoulders in their formations of the charts. And I know we've been talking about this for a long time, and maybe you don't even want to hear about head and shoulders anymore, but we're mired in these head and shoulders patterns right now, and there's really nothing else that we can do but trade out of them. So I want to show you some charts right now I think you'll find interesting, and then I'll get back to you and let you know what we're doing for tomorrow's Omni. Let's go look at some charts, traders. Okay, traders, the first chart you were looking at here is the Dow Jones Industrial Average, and traders, we've pointed this out to you many times, that it has this enormous head and shoulders pattern building up in it. The shoulder, the head, the shoulder, and we're starting to break down through that right shoulder. We also talked about these little V bottoms that came by and gave us a little bounce to sell, and now we are back in sell mode. This is the Dow Jones Industrial Average chart with, again, the head and shoulders formation, and that formation is usually bearish. Let's go look at a few more charts now so that you can see for yourselves it's not just one particular market showing us this look towards the downside, but it's many markets. Let's look at the next chart here. Okay, traders, the next chart you're looking at here is the September S&P daily bar. And the September S&P, once again, you see that infamous head and shoulders formation that just will not go away. You have the shoulder, of course, the head, and the shoulder. So now that's two. And of course, you'd expect the S&P chart to look a lot like the Dow Jones Industrial Average chart. But I don't know if the NASDAQ should look like it, and the FTSE and the DAX and many other markets, but they sure do. And let's go take a quick look at those right now. Okay, traders, the next chart you're looking at is the NASDAQ daily bar. So you've seen Dow Jones, you've seen S&P. Once again, 1, 2, 3, that very same formation in the NASDAQ. And it hasn't even begun to break down out of its right shoulder yet. We have absolutely miserably failed at the 200 bar average at the top of this market. You have the Omni proprietary average right here above the right shoulder. And it looks to me like this market needs to go lower, even if there are little rallies in between the drops. The absolute tenet to this formation is a lower move. So now let's take a look at some international markets here. Okay, traders, this chart is the German DAX daily bar September. And as you can see, the German DAX has this same haunting formation staring us right in the face. We can't seem to get away from it. And we're beginning now to break down through the right shoulder. So once again, traders, I kid you not, although we're stuck in these things for weeks on end lately, this head and shoulders formation is all over the globe right now. It's in many, many charts, but absolutely in the indice charts, which is what we're studying now. And once again, all of the averages are above this market right now and staying above the market. And it looks like we just failed to hit one of our proprietary averages just the other day in the DAX and then began to plummet. And that very same thing happened in the US markets as well. Now I want to show you one more chart, and this will be the FTSE from London. Let's take a look at that one. Okay, traders, as much as we hate to keep seeing this formation over and over again, Here it is, albeit this one's slightly lopsided, not quite as symmetrical as you'd like to see. You still have the head and shoulder formation building up in the footsie, and we failed to get above major resistance on this last little run up. Hit the resistance and is now dropping lower, as did the S&P, and the same thing with the Dow Jones Transportation Average. Traders, I kid you not, keep your eyes open for more downside. Only sell these dead cat bounces. Try not to buy into them unless you're going to be a quick day trader when they come. But basically, off of this formation, traders, you're looking at much more downside coming as the months progress into the summer and then, of course, into the fall season here in the U.S. I think we're going to continue to push lower. Don't forget, you got the infamous September, October months coming shortly, and many, many times we find ourselves getting hammered during those months in the world's indices. So here's a look at some indices around the world, and these charts look very, very similar in my opinion. And based on this formation, traders, lower is the way we will go. Let's see what we get. Please do your own homework. So, you've seen the charts. Traders, I kid you not, that formation is staring us in the face. Not only is it the broad head and shoulders formation on these charts, but you also have many technical indicators all pointing towards the downside right now. We had that little relief rally, did not last very long. Don't fall in love with the upside is a very good theme. In fact, traders, technical analysis enabled us to catch the high tick in the S&P on Friday, and we sold the highs on Monday and had two really nice days in a row. So it appears that indicators have finally caught up to market movement. If you've been doing your analysis, you will definitely recognize the fact that the last 8 to 10 trading days, you had so much movement in the S&P and the other indice markets that the technical indicators which follow them were out of sync with the movement. And technical indicators were calling for up moves. The market was dropping. Then technical indicators were calling for down moves. The market had a rally, and it was a bit erratic, but it has come back into focus. Luckily, it took some time. I couldn't wait because I'll tell you what, it was really difficult trading for the past 8 days. But you've heard me mention that in a few videos, and I think that we're past that now. And with that in mind, for tomorrow, again, Tuesday's trading on the 29th of July, we got a red Omni in the S&P, the ESU8. We are looking for the S&P. Omni says to sell in the mid to high 1240s. Trading about 1236.5 as we speak, traders. Take a look at the charts. See if you like shorting it in the mid to high 1240s and place your orders. Don't forget, always place stops and place them first. If you don't know where to place your stops, or if you're not sure how to approach this market, kindly come on down to our website. It's www.livewithoscar.com, and we would be glad to help you figure out how to view these markets technically, hopefully correct, but we'll certainly teach you how to view them so that you can come up with buy and sell recommendations on your own and compare them to the Omni recommendations. Okay, traders, so we are looking to sell in the mid to high 1240s. Omni's profit objective on this trade is somewhere down in the mid to low 1220s. There is some support on the way down, but I think they can crack this thing and hit it down there. I have an absolute profit objective that we will give you at the site tomorrow. As the market accumulates some data, we will give you an exact get out point if in fact we do start to drop. But for now, your parameters are the mid to high 1240s down to the mid to low 1220s. The NASDAQ looks bearish tomorrow. The Dow Jones Transports look bearish tomorrow. The Dow Jones Industrial Average looks bearish. The DAX looks bearish. The FTSE looks bearish. I'm going with the red Omni. I don't care what happens. And as always, make sure that you're out by the close. Be out MOC by the close. All right, traders. Let's see what happens here, because I know that trading in this environment has been very, very difficult. I see it. My Omniacs see it. However, we've been doing a good job faring through these markets, and I think that we are now in the throes of another drop on the way down. Let's see what we get. It is what I'm seeing. So let's see if you see the same thing. All right, traders, if you'd like to call me anytime during night, please do 702-629-4755. And as I always tell you, please continue to send me those emails. Shoot your emails out to oscar@futuresanalysts.com. Traders, when I say don't trade alone, you know I say this in so many of my videos, but you can't imagine the amount of feedback that I get from so many of my Omniacs. We like to call each other Omniacs. So many of my Omniacs that say, Oscar, since I've found your site, since I'm with this big crowd, since we're all doing analysis together, my work has gotten so much tighter, my analysis is getting better, and my emotions have been taken out of my trading. And if we can't do anything else for traders, if we can help you get your emotions out of trading, I kid you not, traders, if you can learn to trade emotionless, you will make such smarter decisions. Your decisions on when to get in and when to get out will be based on the news flowing and the technical analysis, and not based on the feeling that you just got 30 seconds ago that spooked you to get out, or the fact that you're arguing with your wife on the phone and you don't want to be in the trade anymore, or your dog was hit by a car, or your grandma's in the hospital. People have all kinds of excuses why their emotions got in their trading and why they lost. Well, I'm here to tell you that emotions and trading should never come together. And one of the best ways I can help you with keeping your emotions out of trading is to say this to yourselves every day. Say it every morning, every afternoon, every evening, and especially when you're trading during the day. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.